Hello all, my name is Elon Matias and I'm one of the senior traders here at EAV Trade. And here at EAV Trade, we're going to talk about how to earn money with Forex trading, right? One of the topics or a couple topics that I want to go over is what is Forex trading? How do I earn with Forex trading? How do I achieve the highest possible income with Forex? And how much can I make with Forex? So now let's start with what is Forex trading, right? Forex trading or Forex is one of the highest financial markets in the world. Believe it or not, it's even bigger than the stock market. If you were to Google Forex or Google how much money is traded with Forex or how much money can you make with Forex, it'll explain the definition clearly here. So let's say we Googled how much is traded in the Forex market daily. It says the foreign exchange or Forex market is the largest financial market in the world, larger even than the stock market with a daily volume of $6.6 trillion. Not 6.6 million, not 6.6 billion, $6.6 trillion. So that means on a daily basis, $6.6 trillion gets ran through the Forex market on a daily basis. So do you know what that means for you or for I? That means that you can be a part of that 6.6 trillion that gets made, right? So here at EAV Trade, we want to talk about what Forex trading is, and look at the analysis of how Forex trading works, how you can make money with Forex trading, and what needs to be done. What do we have to look at to make money with Forex trading, right? So all Forex trading is, in a nutshell, is, and I'll pull up a chart here. We have the Australian dollar versus the Swiss franc, right? So this basically says, it's kind of like the stock market, but the good thing about the Forex market that you can't do with the stock market, or at least with a lot of platforms in the stock market, is that with the Forex market, you can bet that a currency is going to go up and you can bet that a currency is going to go down. Versus the stock market, typically you can only buy a stock in hopes for the stock to go up. A lot of times they won't let you, or a lot of platforms or a lot of brokers won't let you bet that a stock is going to go down. So the great thing about the foreign currency or the Forex market is that you can make money on a stock or a currency going up, and you can make money on a currency going down. For example, right, if we say we're looking at the Australian dollar versus the Swiss franc, if we say, hey, I think the Australian dollar is going to go down, you can put a sell. You can put a sell on the Australian dollar and say, okay, let's say we want it to go down to this area right here, to this little valley, there's peaks and valleys. Let's say we want it to go down to this little valley here. Okay, we see, we're looking at the trends, we're looking at the market, we're looking at the chart, and we're saying, hey, we anticipate this currency to go down to this area, because the way I look at it and the way that the foreign currency market works is what goes up goes down. What goes down will eventually go up. So all we're doing is we're playing the middleman, and we're trying to figure out, okay, where can we place a trade? First we have to look at, okay, is the market at its peak and is it going to go down, or is the market at its floor and is it going to go up? And when we figure that out, then we decide, okay, we decide the market is going to go down. Where can we enter to where we can solidify a trade and then take the best possible trade where the stock is going to go down or where the currency is going to go down, so that way we make our money, right? So the question is, how do we do that? We know, obviously, if we bet that a currency is going to go down and it goes down, then we make money because our prediction is correct. If we predict that a stock or currency is going to go up and it does go up, then we make money. Why? Because our prediction was valid of the currency going up. So the way we do that is by running analysis, right? You look at a couple different things when you're trading. And let's see. The main things we look at when we're trading are support, resistance, and moving averages. Those are the main crucial, important things that we look at when we're trading currencies, right? So the question is, what is support and resistance? What are moving averages? How do they work, and how do I use them so that way I can make money with Forex trading? So it's fairly simple. Support and resistance Support and resistance. Let's talk about support. Support is an area where the market goes to on a consistent basis. A point where the market reaches on a consistent basis and bounces up off of on a consistent basis. For example, right? Look at your support as the floor. Look at your resistance as a ceiling, right? A floor, once you hit the floor, the only thing you can do is go up from there. Once you hit a ceiling, once you hit a resistance, the best thing, or what the only thing that can do is go down from there, right? So that's exactly how support and resistance works. Support is your floor, resistance is your ceiling. So the support is an area where the market bounces up from or off of multiple times. For example, when we see a floor, like I said, a floor is an area where it bounces off of and bounces up multiple times. So if we're looking at, we're on the Australian dollar and the New Zealand dollar. If you look here, right, and we marked it here, support and resistance. I'll mark these areas and then I'll tell you exactly why I marked these areas here, so that way you guys know. Perfect. So we have our floor and our ceiling marked. We have our support and our resistance marked. Remember when I told you the support is an area where the market bounces off of multiple times, right? So if you look here, you see the Australian dollar and the New Zealand dollar, it bounced, hit the floor, bounced up. Hit the floor in this same area, bounced up. Hit the floor in this same area, it went a little down, but the market is not perfect. That's one thing about the market. The market is not perfect. So you may have, it's not going to be at a specific area every time, in that perfect area every time. Because if you think about it, you have millions of retail traders or millions of traders who are trading the markets on a daily basis. So it's not going to be 100% consistent. It's not going to be 100% perfect, but you'll have an idea on what exactly a support and a resistance is, because it will be in that specific area. So if we look at here, the support is your floor. Remember, hits the floor, bounces up. Hits the floor, bounces up. Hits the floor, bounces up. That's a support. Why? Because every time it hits the floor, it bounces off of that floor and bounces right back up. What did we say the resistance was? The resistance is the complete opposite of the support. The resistance is an area where it hits and it falls. It hits and it falls. Hits and it falls. Right here, perfect example. You see, hits, falls, hits, falls, hits, falls, hits, falls. That's a valid support, because every time it hits that area, what does it do? It falls. So the great thing about looking at support and resistance is when you see those areas, those are perfect areas for you to sell or for you to buy the foreign currencies. So if you think about it, right? If you think about it, if you think in a logical sense, right? We say there's a support and there's a resistance. So let's look at the resistance here. If every time it hits this area, or at least if majority of times it hits this area, it goes down, we can say, okay, if the currency hits this area again, let's say in the future, if it hits this area again, what are we going to do? We're going to look at the past and we're going to say, okay, every time it hits this area, it falls. We're going to predict that this currency is going to go down, and we're going to capitalize on it, and we're going to make money off of the currency going down. Same thing with the support. If you look at it, and every time, or at least majority of the time, it goes here, goes up, goes here, goes up, goes here, goes up. Majority of the time, you see it hit that floor and it bounces up. What we can predict is, if it hits this area again, we can predict that it will bounce up. And that's how we make our money. We say if it hits this area and it goes up, we're going to predict that it's going to bounce up. And if it does go up, we're going to make our money. So that's exactly how you make money with support and resistance. But another key indicator to look at with trading that further validates where a currency is going to go is moving averages. So let's talk about moving averages and what moving averages are. And we'll look at our trades and we will show exactly how you can make money off of those trades. Let's see. So let's say we're trading. We want to place a trade. We're looking at the Australian dollar versus the New Zealand dollar. And we want to talk about when to place a trade. When is it okay to place a trade? And how are we knowing that the trade is going to go in our direction? The answer is you don't 100% know that the trade is going to go in your direction, but based off of probability, the trade will more than likely go in your direction because of probability, because the past typically indicates the future. If something happens over and over and over again in the past, 9 times out of 10, the likelihood of it happening in the future is pretty high. So we already talked about the support and resistance. So now the moving averages are our yellow and green lines right here. And these moving averages tell a story. They tell a story and they help with predictions. So one thing you want to know about moving averages are, in simple layman's terms, when this green line is below this yellow line, that means the currency is going down. When the yellow line is below the green line, or when the yellow line is above the green line, actually, let's clarify this. When the green line is below the yellow line, that means the currency is going down. When the green line is above the yellow line, that means the currency is going up. The likelihood of the currency going up is pretty high. So remember, we talked about support and resistance. Remember, the support and resistance is the area that the market bounces off of multiple times. So if we look at this, you see here, hit the resistance, that's the ceiling, it bounced down, bounced down, bounced down, bounced down, until eventually it went down and went all the way down. Same thing with the support. This is the floor. It hit the floor, bounced up, bounced up, bounced up, until it bounced all the way up into that new resistance. So how can the moving averages help us with determining? We determined with the support and resistance if the currency is going to go up or it's going to go down. So now the question is, the moving averages, how do we determine when to place the trade? Because you don't want to look at the support or the resistance and say, okay, it hit this area, let's place a trade. No, because you want to wait for one more indicator to determine, okay, we realize where the currency is going to go. Now we have to realize when to enter. Because just as important as realizing where it's going to go, where to enter is almost more important than where the currency is going to go. Of course, you want to know where it's going to go because the direction is going to tell you if you can make money or not. If you know it's going to go down, or if you can predict it's going to go down and it does, then you make money. If you predict that it's going to go up and it does, then you make money. But now the question is, we know it's going to go up or down, but how do we know when to get in the currency? That's where moving averages come into play, right? Remember, when I tell you if the green line is over the yellow line, that means it's going to go up. When the green line is below the yellow line, that means it's going to go down. So the perfect time to enter the trade is when you see it at a support and resistance, but also when you see the green line break over the yellow line. So you see here, right? The green line was below the yellow line, so that means it's a sell. We know it's a sell. It was at this support, or is at this resistance. So we're like, okay, we're not going to enter the trade because the green line's above the yellow line. As soon as it crossed that yellow line, now we place our trade. Okay, it's below the yellow line. We're going to put a sell right here. We're going to put a sell right here. And we're going to ride this sell all the way down to this next support. Remember, we know from the resistance that it's going to go down. Now we have to know when to enter. As soon as that green goes below that yellow, you enter. You get in, green line's below the yellow line, it goes down, goes all the way below to the support. Okay, now it's at the support. Now we can anticipate that this currency is going to go up. What do? We wait for the green line. The green line was below the yellow line. Now it's above the yellow line. The green line is above the yellow line. Okay, let's place a buy. We're going to place a buy. We're going to ride it all the way to the top to that resistance. You see that? Green line's above the yellow line. It crosses. We place a buy. It goes up all the way to the resistance. Same deal. Green line below the yellow line. It's at a resistance. We know it's going to go down because it's at the resistance. As soon as we see it go down, we place a sell. Perfect. We ride it all the way down to that resistance, or to that support, sorry. All the way down to that support. So you see that? This is you making money all the way with it going up, with it going down. And all you're looking at are three major things: support, resistance, and moving average. So let's just say, just so that we can use multiple examples, right? I don't want to just look at one example, the Australian dollar and the New Zealand dollar, and say, okay, wow, it works. Because how do we know it just doesn't work? It just doesn't work with this currency. How do we know, okay, this is the only currency it works with? Maybe, how do we know it works with the Australian dollar versus the United States dollar? How do we know it works with Bitcoin? How do we know it works with the Chinese yen? How do we know? Let's see. Let's try it on a different currency. All right, so let's go. This is the Australian dollar versus the US dollar. Different currency. Entirely different currency, but the same concept. So let's go and let's do this. We have a brand new naked chart, no analysis on it. What are we going to do? We're going to look at support and resistance. Those are the first things we're going to look at when placing a trade. Support and resistance. So let's go. Okay. Perfect example here. We're going to go. And we got right here, we already got our support locked. Support, resistance. Clearly here, clearly we already see it. Let's zoom in, because when I'm going down, all I'm doing is zooming in on the chart and showing you guys what I see. So let's go here. And if you look, you can clearly see support and resistance, right? So when we look at it, remember, resistance is our ceiling. It hits it, falls down, hits it, falls down, hits it, falls down, hits it, falls down. Same thing. And we even have multiple supports here. Hits the support, goes up, hits the support, goes up, hits the support, goes up. But if you look here, we also have another area of support and resistance. So what this tells me is there's multiple ways to make money with this chart. Multiple support and resistance, multiple entries, multiple times, and ways where you can make money by looking at this chart. So let's see. I'm trying to get a clearer visual. All right. So you see here, this is clear as day. Support bounces up, resistance bounces down. Support bounces up, resistance bounces down. Bounces up, bounces down. All these ways are ways you can make money. Perfect ways you can make money. You look at it, what do you see? It's at a support. The moving averages, the green is above the yellow. You buy it. Buy it, goes all the way up. This one, see, this is when it gets tricky. This is when it gets interesting. Because if you can see here, it's at a resistance. It's clearly at a resistance, but the moving average isn't below the yellow. Doesn't mean it's a valid trade, but it doesn't follow your trading rules. Remember, the three things you want to look at before placing a trade is support, resistance, moving averages. So if it hits this area, it hits your support, moving averages, the green is above the yellow, that's a valid buy. But as you can see, it hit this resistance, green was above the yellow. It's still a valid sell because you can see it went down, but I won't take the trade because it doesn't follow my rules. One thing about trading is you want to make sure the trade follows your rules before placing the trade, right? But now if you look here, hit the resistance, but you do see that the moving average is below the yellow. You place the trade. Once it crosses below the yellow, you take the trade down to the support. So one thing you want to make sure is you're following your trading rules in that support, resistance, and your moving averages are following. And then as long as they're following, the probability of you making money is likely. So now let's go. We talked about, one thing we talked about is what Forex trading is. And we also talked about how you can make money with Forex trading. How is money getting made with Forex trading? What do you have to do to get money with Forex trading? How do you earn with Forex trading? We did that with our analysis, with looking at support, resistance, and moving averages. Now, the next question is, how much money can I make with Forex trading? How much? How much money can I make? We know we can make money. We know we can earn with Forex trading, you know, by doing our analysis and looking at support, resistance, and moving averages. But now, how much money can I earn with Forex trading? The answer is that the income is endless. The amount of money you can make is endless. You can make $100, $500, $1,000, $10,000. It all depends on you, your prediction, and how often you're right with your prediction. Which, if you follow support, resistance, and moving averages, the likelihood of you being right is very, very possible. So let's say, so the question is, how much money do we earn with Forex trading, right? Let's take Australian dollar versus New Zealand dollar, for example. We're looking at a trade. Oh, and look at it, it's going down. It hit that resistance, bounce down, bounce down, bounce down, and it's making its way back down to that support. As you can see, it's going exactly in the direction that we want. It hit that resistance, and it's making its way down to that support. Exactly as we predicted, or exactly as we're talking about. So with this trade, this one would have been a nice little sell at this area here. You see the moving averages is down, is low. You see it turned into a resistance. You place the sell. You place the sell. You put your stop loss below the resistance. The stop loss is an area where the market hits, where if your trade isn't going in your direction, you get out of the trade, so that way you take minimal loss. You take minimal risk, right? So if we look at a resistance and we're predicting the currency to go down, the logical way to think is, if it breaks that resistance, then our trade is no longer valid. Our trade is not, our analysis was wrong, so we want to cut our losses before the trade gets out of hand. So let's say, how much money can you make with trading, right? Let's say the answer was, like I said, the opportunities or the income you can make is endless. But the great thing about Forex trading is you can start with as little money as you want and make money, and double your money, and triple your money, and quadruple your money. You can turn $100 and $400 in 2 weeks. You could turn $500 to $1,000 in 2 weeks, as long as you know what you're doing, as long as you know what to look for, as long as you follow the support, resistance, and moving averages, right? So let's go on this trade, and let's say we have a $100 account. Let's just say $100. If we were to use the lowest possible trading size, let's see, let's pull up a calculator. The lowest possible trading size, which is 10 cents per point, right? 10 cents per point. And when I say per point, if you look at this, you look at where we enter the trade. If we enter a sell here, we're entering at 1.06300. If you look at the right, those numbers, 1.06300. We're predicting the trade to go to 1.04800, or around 1.04800. So we're doing 10 cents per point. So in order to calculate that, the easy way to calculate that is placing a sell and watching the sell this way. We're risking 41 points to make 146 points. So if we're predicting 10 cents and we make 146 points. Let's do the numbers. We make $14.60 off of that one trade. Within a $100 account, that's 14% with one trade. If you do 2, 3, 4, let's say we do 5 trades, and those 5 trades go your way, you almost doubled your account in 5 trades. In 5 trades, you almost doubled your account with a $100 account. There's barely any investments where you can almost double your money in 5 trades in a 2-week period. Now imagine if you had $1,000. Imagine if you had $5,000, $10,000. You're turning $5,000 into $10,000 in 2 weeks, $10,000 into $20,000 in 2 weeks. Now let's just say hypothetically speaking, because as a trader, you're not going to be perfect. You're going to take losses. That's normal. It's inevitable. You're going to take losses, but we want our wins to outdo our losses. We want our wins to overcome our losses, but we want to know if we do take our losses, we want to take the most minimal loss possible. So this is where your stop loss comes into play. You see this, right? Your red line or your red box is how much you can lose. Your blue box is how much you can make. So if you look at it, you're risking 41 points to make almost 150 points. If you do the math on that, you're risking, like I said, 41 points to make 150 points. If you look at the numbers on the bottom, 150 or 146, 41. If you divide those numbers, that's a 3.5 to 1 risk reward ratio. So what that means is, if you win this trade, let's say we win this trade. If we win this trade and we make $14, it will take us 3 to 4 losing trades to lose our profits. That's good. Because that means if we win 5 trades, it's going to take us 15 trades to lose our profits. So basically, if we win 5 trades and we lose 15 trades, we break even. So what does that mean? That means you can be wrong more than you're right and still be profitable. You can be wrong more than you're right and still be profitable, right? So let's do the numbers. We're risking 10 cents. We said 10 cents per point. We make $15 on a $100 account. Let's say we have a slightly larger account and we want to make, let's say we want to risk 50 cents. 50 cents. Let's say $1. Let's say $1 per point. We have a $1,000 account. We want to make $1 per point, right? We want to risk $1 per point. That means on a $1,000 account, if you risk 41 points and you lose $41 because you're risking $1 per point. 41 points, you lose $41. But if you win that trade, $1 and you're risking your $1 and you're saying you want to make $146 or 146 points, then you make $146. You're risking $41 to make $146. So now on a $1,000 account, if you make a trade, if you place a trade on a $1,000 account and you win 5 times with this same risk and the same reward, you're making $730. Your $1,000 account just turned into $1,700, $1,730. You almost doubled your account in 5 trades. Just off of support, resistance, and moving averages. And this is exactly how much money you can earn with Forex trading. This is why Forex trading is so powerful. Because like I said, not only you can predict the market to go down, you can predict the market to go up. And you can make money each and every way you can make money. Because the market can only go up, down, or straight. It can go up, it can go down, or it can consolidate. You see that? It can consolidate, go straight. So all you have to do is get in the market when it goes up and predict that it goes down, or get in the market when it goes down and predict that it goes up. Follow your moving averages, look at your risk, look at your reward, and watch your money go up. So that answers your question on, let's see. That answers the question on how much you can earn with Forex trading. We talked about what is Forex trading. We talked about how do you earn with Forex trading. We talked about how much you can earn with Forex trading. Now, a similar question to that is, how do I achieve the highest possible income? How do I achieve the highest possible income of Forex trading? And the answer is simple. Follow your rules and keep a good risk to reward ratio. Your risk should always be much lower than your reward. For example, if you want to make 115 points on $150, you don't want to risk $150 to make $150. It makes no sense, because now you're going to be upside down. Think about it. If you place 5 trades, you win 2 and you lose 3 with $150. Think about it. You're risking 150, you want to make 150. You take 5 trades and win 2. You win 2 trades, now you're up $300, but you lose 3 trades. You win 2 and lose 3, risking 150. That's what? 150 times 3, 450? So you were up $300, but you lost 3 trades. Now you're down $150 because your risk to reward wasn't good. You have a great analysis. Your support and resistance is good. Your moving averages is good. You followed it. But like I said, as a trader, traders are not perfect. You will make mistakes. As long as you're right more than you're wrong, and as long as you keep a good risk to reward ratio, you'll never lose. So let's just say you're risking $30 to make $150. That's a what, 5-to-1 risk to reward ratio? Yep, 5-to-1. You're risking $30 to make $150. And let's say you take 10 trades and you win 6 trades and lose 4 trades. Remember, your reward is 150, your risk is 30. So let's say 150, and we take 10 trades and we win 6. Or let's say we win 4 and we lose 6. You lose more trades than you win. Let's say you win 4 and you lose 6, right? So if we win 4 trades, you're up $600. Remember, your reward is $150. So you make $150 per trade. 150 times 4 is $600. So let's say we win 4 trades, we're on a roll. So then the next, out of the 10 trades, you win 4 and you lose 6, risking $30. So remember, keep that number in your head, $600. You're risking 30. Let's see. You're risking 30 and you lose 6 trades. You now lost $180. But remember, you were just up $600. You won 4 and you lost 6. So you lost more trades than you won. You subtract that 180 minus 60 or 600. You subtract that 180 minus 600 and you're still in profit, $420. 600 minus 180, $420. So that means you lost more trades than you made, but you're still in profit. How is that? How is that? Because you not only followed support, resistance, and moving averages, but you followed a really good risk to reward ratio. Now the question is, Elon, what type of risk to reward ratio should I have? What is the ideal risk to reward ratio that I should have? Should it be 1-to-1? Should it be 2-to-1? Should it be 3-to-1? The answer is 3-to-1 or higher. 3-to-1 or higher. That means for every trade that you win, it should take you 3 losses to lose your profits. So the probability of success is high. For example, 3-to-1 is if you want your reward to be 150, you want your risk to be 50, because it takes 50, 50, 50 to make 150, right? So if you win $150, it'll take you 3 $50 losses to lose that trade or to lose your profits that you made. That's a 3-to-1 risk to reward ratio. But the higher the risk to reward ratio, the better. That's important. Support, resistance, moving average, risk to reward, right? So we talked about what is Forex trading, how do I earn with Forex trading, how do I achieve the highest possible income, and how much can I make with Forex trading. So how much you can make is endless. It really depends on, first, how much money you start with, your analysis, which we talked about, support, resistance, and moving averages, and following a strict risk to reward ratio. With a good risk to reward ratio and using support and resistance and moving averages, you can easily double, triple, quadruple your account in 2 weeks, in a month. And like I said, there's minimum investments that you can put $100 in and turn it to $400 in a month. $100 and then turn it to $200 in a month. $500 and turn it to $5,000 in a month. The more money you have, the more money you'll make. But the thing is, you can still double your profits, even with $100, even with $50. And think in your mind and name an investment where you can put $50 in and turn that $50 to $100 in 2 weeks. Name an investment where you can put $5,000 in and turn that $5,000 to $10,000 in 2 weeks. And that's the important part about what we do here at EAV Trade. We teach you guys not only about Forex trading, how to make money, how to achieve the highest possible income. And with working with this company, we will teach you how to double, triple, and quadruple your money in a month, right? So if you follow these steps, guys, if you follow this strategy that I have, I promise you, you will double, triple, quadruple your money, right, guys? If you guys have any questions, don't hesitate to reach out. Like I said, my name is Elon Matias. I am one of the senior traders here. And I hope you enjoy your time here at EAV Trade. Let's make some money, guys.